Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin.
LME 3-month lead. Now, 10 weeks ago, I said we had a choice of patterns here. And I quote, "We have a possible choice of pattern here, or maybe even both patterns acting at the same time." Anyway, the first pattern is a possible mid-November 2022 to date head and shoulders top. This pattern is a little extended right now, and it has not as yet seen a significant break below the neckline, currently at 1980, which is highlighted in green on my daily chart. The second pattern is a derivation extension from this head and shoulders top. It utilizes the neckline as the lower trend line plus an optimized upper trend line, currently 1948, and highlighted in bright red to together make a possible descending wedge pattern. End of quote. I also added, and I quote, "Right away the optimization I have undertaken makes me suspicious about the veracity of this possible pattern, but I'd rather say it and only look a fool now than have it confirmed later on." End of quote. The market exited out of this optimized descending wedge pattern back in mid-March on the upside and proceeded then to do nothing. We have not had the moves higher for a descending wedge pattern nor higher for a continuation head and shoulders pattern. What we have seen is a more or less sideways movement with prices capped by layered resistances and held up by layered supports. On the top side we have resistance from the now declining medium moving average, currently at 2120. And I suppose in part the market was eroded by the overhead 50% Fibonacci line of the March 2020 to March 2022 move at 2135. Plus, and I suspect by a large part as well, the surprising resistance of the lower trendline extension of the May to June 2021 descending triangle, which I've highlighted in purple on my daily chart. And that's currently at 2177. Likewise below we have layered support starting at 2058, 2039, the January 2020 high, 2021 and 2001. This last one is especially strong, I suspect. This is all before even touching the trend lines of the now broken descending wedge pattern. Now the support at 2058 has been breached and almost broken twice, and the support at 2039 has also been assaulted and breached, but there has not been any definitive break below either, not yet. This has in the last 2 weeks or so been a move below, above, and the latest below the flatlining long moving average, currently at 2080. This tendency to move below this long moving average may be the start of a move lower, but it is taking its own sweet time about it, if it is to happen at all. It has all still very much left us with an open question. You see, all the moving averages are getting awfully close together, and nothing bar the moves below the long moving average is showing that much of an indication of direction right now. Finally, it's worth still noting that still overshadowing all of this was January's monthly key reversal down. LME 3-month tin. As I've previously mentioned countless times here, we have a series of stratified resistance and support levels that slow but do not halt the market's major moves. The significant ones were, and still are, the following levels. Below the market at 25,250, then the 2012 high at 25,875, between 23,000 to 24,155, and at 21,360, and between 20,435 to 25,10. Above the market, the lesser Fibonacci line at 27,330, the July 2011 high at 29,010, the lesser Fibonacci line at 30,205, and finally a major one, the interesting 50% Fibonacci line of the March 2020 to March 22 move at 31,845. To all these I have also previously added the 50% Fibonacci line of the recent late October 2022 to late January 2023 move at 25,020. Now, I've kept this one separate as the market has seemingly today gapped over it, and I'm wondering if today would be a possible shooting star pattern. It's all too early just now to tell, but this is all looking very interesting at that level. Looking at the bigger picture, I said some 16 weeks ago that the 50% Fibonacci line up at 31,845 would be the real test of any rally, and so it has proved to be, as prices did not break up over this 50% Fibonacci line, but just breached it with one single close over back in January before heading back down, gapping lower indeed. On its way down, the market hesitated in February, making a small bearish half hesitation before fulfilling the pattern down at the 21,360 support. Since then, we've seen prices gradually move back up through congestion and resistances, but peaking short of the middle time, currently at 30,000 exactly in mid-April of the late October 2022 to mid-March 2023 bullish shift pitchfork, that is highlighted in dark blue on my daily chart. So overall, the market has moved upwards in between the middle time overhead and the lower time below, and the lower time is currently at 23,680 of this bullish shift pitchfork. But I should point out, we've barely tested either times, which after 2.5 months I'm a little suspicious of. This, plus the general shape of the action, prompted me last week to ask a simple question. Is the action since the height of January a possible, very large, bearish halfway hesitation in the making? It is too early to say for sure, plus we do have a lot of congestion support below and above the market. I'd just like to draw your attention now to the moving averages, with the flatlining medium moving average above, currently at 26,040, and a flatlining long moving average below, currently at 23,925. This prompted me last week to draw both a bearish Andrews and shift pitchfork for the 2023 action. The reason for both is that neither looked that great, and this proved especially true for the steeper bearish Andrews pitchfork, which this week I have retired, as it was no longer valid. This leaves the not highlighted bearish shift pitchfork, with the upper time above the market currently at 26,285 and the middle time below currently at 22,135. After retiring one bearish pitchfork, I'm quite happy to retire this other one, unless it performs.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.